everybody, welcome to the Trading Market Technicals morning call video for Tuesday, December the 10th. Markets took a little bit of a break. Dow Jones up 5, Nasdaq up 6, S&P up 3, and the Russell down about $1.50 on yesterday's trade. Very quiet session. To be expected after the big run-up. We haven't gotten really any follow-through yet, but it just seems to me that a lot of the indexes are moving, and just a handful of selected stocks are moving intraday. I see a lot of this pattern going on during the day. I'm watching a lot of stocks and just don't see movement in any of them. So this is a concern to me. I'm also going to be looking at several key indicators from between now and the end of the year, because they continue to diverge from what the market is actually doing. Yes, we all know that price is king. Price leads, and our indicators lag price, obviously, but our indicators also gives us a little bit of insight of what's possibly to come, right? We always want to get a confirmation from price, but I must tell you that you have to be cognizant and be aware of what's happening around you, and looking at kind of deep inside the markets right now. And definitely, I would be a very, very cautious bull here, especially now. Now, I do think that the markets could be paused for another move higher. Absolutely, I don't rule that out. We are coming into the end of the year, and I don't suspect that any of the portfolio managers are looking to hinder on their bonuses and disrupt the market or what's it doing. However, all you need is one small little catalyst to get the ball rolling down the hill, and everybody's going to follow, and there's only going to be one exit. So that's the word of caution that I would be using. I'm looking at stocks right now are harder and harder to find for setups. To me, I think the best opportunities would be, if you are an options trader, I would be selling some spreads, verticals, buy, and be looking for the best buy setups that is during the course of the trading day. Wouldn't be looking to be adding any positions at this area here. So what we have here is I want to show you a few indicators. I'm not going to get crazy because really nothing has changed, but you've seen all of these indicators before. But the New York Stock Exchange new highs, we continue to make lower lows and lower highs here, up about 60 ticks, but that's really about it. Kind of quiet. But I'm looking at the overall picture here, and you can see that we're making lower lows and lower highs. Nothing may happen until January, but I do suspect a market sell-off at one point in time, if not at the end of, if not now, which I'm giving it more like a 30% chance, 20% chance now, other than maybe a day or two of selling, than a real good correction, which will probably end up coming in 2014. But you can't not just push this off to the side. This is not good here. And again, when I look at that and I see new stock exchange, new highs and lows, not going anywhere. I mean, up 67 here. This is nothing. We're going nowhere. Markets are making new highs, and our indicators and our breath is not following. That's not good. It's not what you want. Tick continues to start now hovering around the zero line, making lower lows and lower highs. Not liking that either. That price action is also telling me that we're starting to wane to the downside. You could just see it by making from here, lower lows and lower lows, and now again breaking above the zero. Now we can go back up again, but if you continue to hover around zero and we start breaking below zero and stay below zero, that's also not a good sign. Okay. New York Stock Exchange new lows. We continue to hover around this little neckline here. You see that inverted head and shoulders, left shoulder, head, right shoulder. Now we're starting to tick a little bit lower. We're only down 7, not a big deal. So this is really, really looking to watch here. Okay, stocks above the 50-day moving average. Again, we're going back on a buy signal on Friday, but we're just not going anywhere. And this is a logical spot for a market sell-off. Okay, and the VIX. VIX here at the lows here. We're basically at the 2013 lows. Another 50 cents. You can get that today if the market decides to actually move higher. And then look for a possible bounce here. So these are the indicators that I'm going to be watching between now and the end of the year, to see any other clues that we may start to sell off again. Remember, all you need is one big trigger in the marketplace, whether it be a big whale taking profits, hitting a sell program, and then everything starts to follow. Because remember, there's not going to be one manager left behind. If they want to lock in profits for their bonuses, they're going to. So remember that, okay? So let's just keep that in mind. Let's go right into the charts here. Nothing really has changed. I continue to love crude oil on pullbacks. I've loved it here. As you guys know, we've been playing it all of November and December, but now I can't get in. I can't get involved here. As a matter of fact, crude oil is up another $1.16. That's going to put the USO above the 200-day moving average. And right now, we were hovering at the 50% retracement from here, from low to high. This whole big move, we retraced 50%. Well, actually, not really, but because we didn't get down here. But if you look at this area here, we're back up at the 50% retracement now from this move lower. But if you look at it, any pullbacks to this little consolidation area here at $34, even 30 if you can get it, anything under 34, which is right around the 20-day moving average, would be an excellent opportunity to get to try to get long crude. Remember, let it go. I wouldn't be chasing it. It will give us an opportunity, especially commodities. They usually, eventually, when they do take profits, they slam them for a couple of days. So just keep an eye on this. A little bit extended here. We did break above it. We're probably going to get above it in the at the opening, but I do like crude here if we can get back some sort of a pullback. Now, GLD is going to give us another opportunity, I think. Gold is up 1140 right now, so that's going to put us back above this area here. Now, I'd like to get, if we can get anywhere between 122 to 124 area, right, I think here's going to be the sweet spot to get short gold. And this is an area here I like. And if we can get back above it, probably going to be a few more days. But if we can get a good short covering rally for a couple of days, and I think we can get short gold with easy to manage in this trade here, because your stops would be above the 50-day moving average. That's why here you wouldn't want to get it too close. I'd like to get it more closer to the 50-day moving average. You can see here the Bollinger Bands are starting to come in and starting to tighten, so it looks like possible pressure building here in this index. Okay, spiders. Not much of anything, nothing really to say. We're still hovering above the highs here. We do have the 2012 uptrend line still well intact, and we're right underneath it. So let's see what happens here, guys. Really, really quiet trading. I do suspect the next 2 weeks are going to be rather interesting, so I'm keeping my palate dry here and trying to look for the best setups possible. Here's the diamonds. Again, you can see energy starting to build here in the Bollinger Bands here. We're just sitting on that 2012 low, that trend line, and we have now starting to recycle this overbought reading, which is a good thing. Now, this could rally at least to the highs or maybe make new highs. Okay, we really don't know. But with all of the warning signs that I'm seeing, I just have to be cautious. That's just part of my trading plan. Okay, right up in here, the transportation sector. Now watch, if oil continues to run, the transports are going to get hit pretty hard here. And if the transports get hit hard, then it's probably going to start taking down some of the other sectors as well. Remember, this is our leader. And IWM, same thing here, just kind of hovering along here. Now, the IWM saw some real weakness here in mid-morning to the afternoon hours here. Really took it on the chin. So something interesting to see if risk starts to come off here. And if risk comes off, we want to see if money's flowing into another sector. If money just comes out of the market, that's not going to be healthy for this bullish trend at the moment. XLF, I do like the banks here. I continue to like the banks. I like the banks on a deeper pullback, though. It wouldn't be for trade intraday, sure, if you can get in. But if you look at Goldman Sachs here, obviously you can see real pattern here, low to high, low to high. So we're in this channel configuration here. So let's see if we can get maybe midpoint here, back to the 50-day moving average. I'd like to kind of hold out a little bit more before I'm looking to buy up these areas here. Remember, the markets are a little tired. It seems tired intraday. They get a big push and then just kind of fade the whole move or half of the move. So it's really sloppy price action here. And then JP Morgan, this is one of my trades. This is one of the trade setup that I do like here. Nice bull flag, as you can see, off the bullish move higher. I love this formation, and this to me JP Morgan is going much higher. But I'd like to see a little more consolidation. And now, even if it broke down below the bull flag, I'd like to see it hold this little, just this little gap area of support here, right up in here, right? So we want to get this area, and as you can see, the more it holds, this 50-day moving average is going to come right back up in here. And if we can get right up in this area and then hold this little area from the upper end of the gap support area to where we are right now, and the 50-day moving average comes in, that would be a phenomenal buying opportunity. Easy to manage. You'll be below the 50-day moving average. You'll be your stops. Obviously, first target would be the highs and then some. And I like the Bollinger Band starting to kind of really curl up here. So the longer it consolidates, the better it builds energy for another move higher. So watch JP Morgan here. Citibank as well. I got to get a chart in Citibank for you guys tomorrow. IGN, the networking sector, just kind of sitting here, just kind of chugging along higher. This is definitely what you want to see is, in the technology within the networking, the semiconductors here, all holding up well. This is also a good thing. Now, we just want to make sure that we have, that they all hold up well until the next push higher. They start to break down, that's another cue you got to be careful about here. Okay, Apple, not really a good buy entry here. I'd rather see Apple come back down to at least the 538, 535 area. That would be a good target. Yes, we are way away, but you know what? If it goes without me. I'm not looking to start picking an area here at these areas, especially a big explosive move like this. Now, it could consolidate at the upper end of the range and break out higher, but that'll go without me. It's not part of my trading plan. And lastly is the Qs, as you can see here, just kind of hovering along at the upper end of the range. Again, guys, I can't stress enough, the market is so overextended, grossly overbought. We have sentiment at extreme levels. Everybody is bullish in the market. As a contrarian, you have to take that as a red flag and use a word of caution. That doesn't mean you can't trade, and doesn't mean you want to short the market. You want to make sure that you are on the same side of the trade. But when you get to these levels from here to here, just in the last 6 months of the year, stocks have doubled, tripled, up 80%. It's a little tough to start looking to leg into trades. And if you can, again, if you have certain strategies as far as option selling vertical spreads, that's another thing that would be the best thing to do until this market could actually start to move in. And if not, pick the best day trade that you possibly can find, and then stick to that 1 or 2 trades a day. Reduce your exposure, reduce your trading, because if there's no volume, right, it's going to be that much harder for you to make money or to make money back if you're losing for the day. 2, 3 trades, take a step back and see where you are, reevaluate the position here. Other than that, I would be very nimble, and the closer we get to the Christmas holiday, the less volume we're going to have, which is going to make the market very whippy, all right? So just keep that in mind. All right, guys, have a great day. We're expecting some snow on the East Coast. We'll see what happens today, 3 to 6 inches. First real snowstorm of the year on the East Coast. But you know what? It's good to have a little white Christmas, I guess. Anyway, have a great day. We'll speak to you tomorrow. Take care.